Good afternoon or early evening, I should say. It is Wednesday, February 21st, 8:11 p.m. I'm still in Boston, people. Like I said, I'm going to be here for a few months. Um, I hope you're still with me. I really do. If you are, thank you for your patience. Um, I'm trying to work things out. I got my hotspot with me now, so I don't have to go to Starbucks and upload a video that could take an hour and a half. I got my microphone, so hopefully the sound is a little better. The one problem I've been having was just trying to find a quiet place that's well lit. Everywhere I go, it's just music and just people, and not easy. So right now I'm in a cafeteria where the employees of this building congregate, but they've all left for the day, so I'm taking advantage of it. So hopefully, I'll be able to find a consistent time to get these videos out because it's so important, people. Because I really believe that what we're witnessing, the wheels are in motion, and I don't think they could be stopped. And what I mean by that is this inflation genie that's out of the bottle that the Fed wished for all these years. We want inflation. They have this dual mandate, right, of maximum employment, okay, unless, of course, they decide it's overheating, and this price stability, this 2% inflation target that they can't get to. And now it seems inflation is everywhere, so they've achieved their goal, so now they have to slam on the brakes. So what's happening here? I think it's clear as day. Now, let's start with gold. Last week, gold had a terrific week. It had taken out 1340, my key level. I said it had to take out and hold 1340 for 3 consecutive days, not counting the holiday. I said we're going to skip that holiday. We're going to wait for Tuesday. I was certain. I think I might have even used the word certain or sure that it would hold, and it didn't. It didn't. They whacked it again. Okay, it's a battle. It's a war. Gold lost this battle, but I believe firmly that this is a wall of worry. Now, when they knocked it down, when the markets were tanking, and everybody was like, why isn't gold doing what it's supposed to do? When in reality, it did exactly what it was supposed to do, provide liquidity. It went down to about 1306. Now they whack it down, and they can take it down to 1324, basically. It's higher lows so far, and that has not been, broken. So I think it's doing quite well. Now it's up $1 in the after hours at 13.25. Silver is 16.50. So in spite of the fact that rates are rising, gold continues to just perform. Okay, it's not breaking out. Okay, but it's, I think, in a very subtle way, it's forming this long base, and it's getting ready to complete this base, ready to take out 1340 and beyond. Okay, and believe me, you know that I'm not no gold's going to 5,000. I'm not one of these carnival barkers. Okay, I've been saying gold's been in a bear market, right, these many years. I've yet to call it a bull market because this resistance level is very, very difficult to take out. Now, let's talk about stocks. At one point, the Dow Jones Industrial Average was up over 300 points today. It closed down 166 points. That's almost a 500-point swing. Now, you also know that I'm out of stocks. I announced it on this video. I sold more, and sold my final batch to be out. That was what, 2 months ago, right? I'm out of stocks except for my gold stocks, right? And I believe stocks have made a top. There's going to be volatility. There'll be some ups, but I think the top is it. rising interest rates. This is the clear trend. And this is where we have to keep our eyes on the ball. Nothing else. Okay? We cannot get distracted. 10-year hit 2.94. Okay? 94. It's going to 3, I said. The 30-year is at 4.21. Rates are rising. Why? Because bond prices are falling. There is this narrative out there that these rising rates is somehow bad for gold and good for the dollar, when in fact it is the exact opposite. But this narrative will play out until it doesn't. Bond prices are falling because the value of bonds are going down, okay, due to inflation, right? The dollar is catching a little bit of a bid here. Again, I believe it's because of this false narrative. It's 90. Okay, the yen has weakened. There's strong correlation between gold and the yen. I don't know why, to be honest, but the yen is 107.68. Okay, so the dollar has strengthened against the yen. It has strengthened against the euro. It's now 1.227. Okay, but I think this is going to change. Okay, I really do. So the VIX, there's still real fear in this market. So I think as this calendar year progresses, now people are calling for 3 rate hikes, 4 rate hikes, even Goldman Sachs 5 rate hikes. Okay? The Fed is not worried about inflation. Okay? They came out with the FOMC minutes today. Okay? And this is what sent stocks reeling. Okay? Federal Reserve officials see increased economic growth. Remember, when you see and hear that word growth, think debt. Okay? Growth equals debt. That's all it is. Because without debt, there can't be any growth here. Okay? Federal Reserve officials see increased economic growth and an uptick in inflation as justification to continue to raise interest rates gradually. We've seen this play before. Alan Greenspan tried to do it. Quarter of a point, a quarter of a point, a quarter of a point. It doesn't work. They're behind the curve. Okay? And when you think about it, right? Why are they raising rates if they haven't hit their inflation target? It makes no sense. Unless, of course, they know the inflation genie is out of the box. They're behind the curve. Okay? Recession coming, and they have to raise rates back. They have to have this cushion. Though the policy-making Federal Open Market Committee chose not to hike its target rate at the January 30th, 31st gathering, members indicated clearly that the path ahead for rates was higher. Markets greeted the news with a strong bout of volatility. That was that almost 500-point swing in the Dow. Stocks first spiked higher, then receded as bond yields jumped, with the benchmark 10-year Treasury note hitting a fresh 4-year high. 10 years at 4-year high. Officials concluded that upside risk to economic growth had increased thanks to tax cuts, increased consumer spending, and confidence, and a general plethora of signs that growth was moving along a sustained path. Members said they had revised upward the economic projections they made at the previous meeting in December. So, it looks as if they'll try to do these 3, possibly 4 rate hikes, and it's only a matter of when, not if, the Fed has to balk and stop, okay? Because right now, stocks are just, you could see the stock market, there's going to be volatility, okay? And I believe, like I said, the wheels are in motion, and I don't see anything changing, the trajectory, okay? So they can whack gold all they want, but I think with each time They're failing. They're failing. So that's about it, people. I thank you for your patience. So I got my hotspot. I got my microphone. The other thing I need to do, I think, is I got to get a little printer so I like to print out some articles and read it. So let's watch it. I'm still okay with gold. I don't have a problem with it at all. I think it will rebound. I think these rate hikes are already pretty much priced in. Okay, so we'll see what happens in the coming days. I want to see, if possible, gold close this month at that 1339 level. So we'll watch it closely. That's about it, people. Um, Again, just thanks for listening, and Lord willing, somewhere we'll pick it up tomorrow. Ciao.